Is the supply for Bitcoin 21 million, or has this now been changed? Now, this is a very viral topic that was all over CT, and realistically, guys, I hate to admit it, there's a little bit of truth to this, and we're going to go over that in today's video. We're going to be talking about what exactly is this new theory and why it kind of makes sense, but why I also think that I don't know if this is going to be the end of the world. Okay, listen. Welcome back to the channel. It's your boy Crypto RJ. This is the Bitcoin to 1 million channel where I make daily Bitcoin videos going over all sorts of things like price predictions, treasury updates, concepts, and just stuff like this, theories, where it is pretty important to understand that Bitcoin is going to go to $1 million one day, but to get there, we're going to have a bit of a rocky road. So come through, stick around for the information, and you'll love the jokes that I make here and there, and subscribe down below, and let's get right into it. So we're going to start off with just straight the meat potatoes, okay? So Bitcoin has a huge problem that nobody talks about. Is everyone ignoring it on purpose? Possibly. But Bitcoin's fundamental thesis has changed drastically. The hard truth, 21 million is no longer the maximum supply. Now, guys, this is pretty interesting because, first of all, guys, we know that the max supply is 21 million, right? It's safe to assume that about 3 to 4 million coins are lost forever. Even if you call it 3 million coins, that's about 18 million% of a circulating supply, right? Now, with that being said, this is an assumption that kind of everyone makes, but realistically, those 3 million coins are lost. No one really talks about because it's kind of just like a, hey, it's just lost, okay? Now, No Limit here has been around in the game since the Mt. Gox days, so definitely well before myself. And, we used to worry about exchange hacks. Now we should be worrying about financialization, which is interesting because, the whole time with Bitcoin, we were like, oh, we can't wait for ETFs. We can't wait for government regulation, da-da-da-da. But this might be a bad thing, okay? So if you think Bitcoin is purely supply versus demand, you're trading a market that doesn't exist anymore, which, I hate to admit it, is partially true. Now, maxis won't tell you this, but Bitcoin has become fractionalized. Wall Street didn't buy Bitcoin to pump your bags and make you rich. They bought it to turn it into a fee-generating instrument, just like they did with gold in the 80s. Now, this is the paper Bitcoin multiplier, which, guys, this concept here is arguably one of the most important things that I think people need to understand, and a reality that most need to start to accept, okay? Now, in the old days, right? In the old days, 1 Bitcoin or 1 BTC equals 1 BTC, right? You held the keys, you owned the asset, right? You had to self-custody, you had to have a wallet or an exchange, and that was pretty much it, right? Today, thanks to ETFs, lending, and the futures/derivatives complex, 1 Bitcoin can support multiple layers of claims and price exposure at the same time. So this whole concept here pretty much sums it up in one sentence, right? Bitcoin is no longer 1 Bitcoin, right? You don't have to buy 1 Bitcoin to own 1 Bitcoin. You can now buy ETFs, or you could buy something else to quote unquote own 1 Bitcoin. And that's the whole problem here, right? Because the whole concept of Bitcoin is there's only 21 million in the world. You have to own it yourself. There's not enough there's not enough Bitcoin for one, for fuck's sake, let me say that again in English. There's not enough Bitcoin for every millionaire in the world to own 1 Bitcoin, supply, demand, etc., right? Now the base, 1 real BTC that sits with the custodian backing an ETF or large holder, right? The hedge, market makers and funds use CME futures and options to hedge that exposure. 3, the leverage, traders take per positions, cash settled, that multiply Bitcoin exposure without touching spot, right? So leverage traders. The wrapper, Bitcoin can be locked and tokenized for DeFi yield, creating another claim layer, which this one I don't think really matters. Like we've had like Binance Bitcoin, we've had all this different type of Bitcoin for a long time. I don't think that really makes much of a difference, but my opinion, okay? The note, banks issue structured products tied to Bitcoin price/volatility, more exposure, more claims. That's 1 coin on chain, right? But that's 5 claims in the order book. When supply is elastic via derivatives, scarcity is irrelevant in the short term. And again, I want to highlight this in the short term, okay? They can print infinite paper Bitcoin to absorb demand, capping rallies and forcing liquidations whenever they want liquidity, which we've seen so much manipulation in the past 2 years. Ever since we had Bitcoin ETFs, it's just been a manipulation haven. It's been a monstrosity, but that's just what's going on. Now, this is exactly how they destroyed gold's volatility. Now, can it be fixed? There's only one way to make the 20 million cap real again. Get your coins off exchanges and take self-custody. As long as your coins are sitting on a centralized ledger, they're being used as collateral to bet against you. Now, Another thing to take note of here, guys, is not all exchanges do this, right? There's some exchanges that are just very simple. You just buy Bitcoin or you just buy Ethereum, boom, that's it. But these exchanges that have, derivatives and futures and this, that, whatever, lending, all that stuff, that's where all this starts to get a little sticky, right? Now, regardless, I'm not saying all centralized exchanges that just let you buy and sell Bitcoin are, great and, holy by any means, but the point I'm trying to make is the situation does get worse with certain exchanges, right? Like you have shit like Hyperliquid where you're trading stuff on like 500x and it's like, cool, like, are you really, am I actually trading 500x of said token? And again, maybe I'm wrong, but someone can correct me if I'm wrong. Now, listen. That doesn't make me bearish long term because I've seen this set up before, and yada yada yada, etc., etc., etc. Right? So it's a pretty interesting theory that we have here, and like I said, I do think there is a lot of truth to it. Right now, let's talk about price action and a couple other Bitcoin updates before I wrap up this video, guys. On this channel, I always have a bunch of different things in my videos. First off, we usually have the meat and potatoes, so that's the title and thumbnail. I always have price action, and then I talk about any quick updates that I quickly can. So let's get into that portion of the video right now. And guys, please do subscribe down below and leave a like if you do enjoy this type of content. It really does help out a lot every time you guys hit subscribe. I'm trying to get to 100 subscribers before this month ends. Now, Bitcoin's at $71,000, basically neutral on the day. Michael Saylor has just bought 1,142 Bitcoin, which is insane because he bought at $78,000, which is crazy because Bitcoin literally hit 60K last week, like a couple days ago, right? So to see him buying at these crazy prices, I don't know what to say here, okay? Now, Bitcoin miner and treasury company Kango sells 4,451 Bitcoin. Now, obviously, this does suck, and this does have a, I guess, negative effect to other treasury companies, but they justified this with saying they wanted to do this to strengthen its balance sheet and AI expansion. Now, it is what it is. Can't really say much about that, but yeah, interesting take for sure. Now, fun fact, 15 years ago today, Bitcoin reached $1 for the first time, and 15 years ago from now, will Bitcoin be at $1 million? Let me know in the comments down below. But guys, listen, that is going to be it for today's video. If you guys did enjoy, I want you guys to leave a like, subscribe down below, and I'll see you guys in the next one. Take care.